Hey guys, welcome back to another video, and today I'm here to talk about a very good stock that is at a very attractive valuation. This is a very popular stock, a very well-known stock, and a stock that a lot of you guys probably already own, but I want to talk about it nevertheless because I think that this opportunity is too good to pass up, and it has a very bright future ahead of it, this company. So without further ado, be sure to like the video, smash the subscribe button. Also, we're almost at 30 subscribers. That would be awesome. And hit the like button too. That would be very appreciated. So yeah, let's get into it. The stock I want to talk about today is Meta Platforms. So this is Facebook, Meta, whatever you want to call it, but this stock has had a good year to date. They're up already 8% actually, but they were up 24%, almost 25. And that's what I want to talk about. I mean, the market is in a little bit of a correction right now. If we want to see SPY right now, this stock is actually red on the day. SPY is down 4% in the past month. Past 3 months, it's down 5%. Year to date, down 2.3. In the past year, it's up 13. So, I mean, we can see obviously just from this chart that SPY is in a little bit of a, not a little, it's in a pretty good correction right now. It was at all-time highs over here at around 612, 613, and now we're getting near, like, we're the lowest. It's actually the lowest it's been this year, SPY right now, so that's very interesting. So yeah, you can see that it's at the lowest point it's been year to date. So I mean, this is a falling knife. SPY could keep falling even harder, and maybe this is a correction that's going to pick back up because every dip recently has came right back up. That's just how the market has been. But we'll see. And that's what I want to talk about with Meta. I mean, we can see there was a dip in 2020 actually. I mean, Meta, you can see right here in 2021 it was $380, and then the COVID dip happened and it went all the way to below $100. So I mean, we're not seeing that level of dip right now, but I think we could be soon. And so that's why I'm going to start buying shares like crazy of Meta. I think that this is a company that has I know it has a very bright future ahead of it. You can see some of what the bulls say. I mean, they're the biggest, their ad revenue is crazy. They own Instagram, one of the biggest social media companies. Facebook, also huge. And they have a lot of other things behind the scenes that aren't even talked about widely. But I mean, you can see the stats of this company: $1.63 trillion market cap. Their price to earnings ratio is around a 27, which I think is still undervalued. They started paying a little bit of a dividend. It's 0.31%, which is, not a lot, but when you own a crazy amount of shares, that adds up very fast. So yeah, I mean, this is a company that I definitely think is going to be $1,000 company fairly soon. I think over the next year or two, this company is going to hit $1,000. So that's around a 40% return in a year or two. So I think you're going to be seeing a 1 in front of this. There's going to be 4 digits actually pretty soon. So yeah, I mean, I don't know. This is a pretty obvious buy, I think, because there's companies also like ones like Google, who I don't see being very good for the long term, but I do see Google being, a company that's a very attractive valuation play. We can see it's at, kind of at the support level right here that it was in 2024. It's around the same price, and year to date, this one's down 11%. And I think they just actually beat on earnings or met expectations. So yeah, there's nothing wrong with this company. Their guidance was good. They've just been falling this year. And yeah, I mean, their price to earnings ratio is almost below 20. And for a company like Google to be almost below 20 PE, that's a little crazy. For a company in the tech space to have a PE that low, there's something going on with this company that, I'd definitely scoop some shares up of this if I were you guys. This is a little too cheap to ignore with a PE value like that, a $2 trillion market cap, and where they're with their growth rates where they're at. I don't know why you wouldn't want to buy Google right now. And then another one, I think, another big company, Amazon. This company has been getting beat down also year to date. I mean, you can see it was at a all-time high actually for the company at $242, and now they're just trading around 200. I actually bought a lot of shares of this company over at around 190, so it's almost all the way back to where I bought them. I was up a very good amount when it was trading in the 240 range for a little bit here, but now I'm back to almost break even on those shares. So yeah, I mean, I just want to show you guys these opportunities for these companies that are huge and amazing companies and great corporations. And these are times where you buy companies like this in these dips. And if this dip does get bigger, I mean, look at the dip. This is a sizable dip on the chart. I mean, dips like this have happened right here. This is around the same size. August 2024, a dip like this happened. It went from $200 all the way down to 167, and then it bounced back up to all-time high of 242. So if you bought at 167 and it went to 242, that's a pretty nice increase. And then you can see right here another dip happened. This one's a little bit bigger, but around the same size. It went from $164 all the way down to 100, and it went back up to 143. It gained 40% just over the course of 2 months, 3 months. So these are the opportunities you want to take advantage of, and with companies like this, you have that cushion that this great company that's going to go up, so you can buy it anytime. I mean, I'd be fine putting all my money into Amazon at 242. I think it's going to outpace the market and be higher than 242 all time, so I'd be fine buying a lot of shares right there. But if you can buy shares for 200, you may as well. But that's why I really like Meta right now. I think that this is a company that is even possibly better than Amazon. They were all the way down to $625 today, down almost 5%, but it did recover a little bit at the end of the day. But I mean, this is one where every dip, this is a 5-year chart. It's insane, honestly. But I mean, you can see it went under $100 right here during COVID. That was quite the dip, but we can see like a dip like from 527, it went down to 443, so it lost almost $100 in value, and then now it gained, back at all-time highs, it gained $300 in value. It lost 100, gained 300, and we can see that their 52-week low is 400 and their 52-week high is 740, and now it's at 640, and yeah, I mean, they lost, just from February 14th to March 4th, they've lost over $100 in value in their stock. And I think that I know that nothing has changed with this company. Growth rates haven't slowed. Their business model hasn't changed. Nothing worth selling this company has happened. So that gives me all the reason to buy shares for even cheaper than what they should be worth right now during this dip. And we can see that every time this company has dipped, they've came back harder. I mean, past history doesn't indicate future results, but we can see that every dip they've had that's been sizable, like from here 485 to 430, now they're a $640 company. So yeah, I mean, this is a no-brainer for me. I just wanted to talk about the opportunities that markets like this bring. It's been rough for a lot of investors, I think, especially look at my portfolio, down 13% in the past month, down 12% in the past 3 months, and year to date down almost 9%. But we're still up in the past year, all time we're still up. But I mean, definitely has not been easy these past couple of months. But this is what really tells you. I mean, can you be in the stock market? Do you have the stomach to get these losses and these temporary down moments? And when the stocks do go down, are you ready to ride them down and buy more shares and dollar cost average? So yeah, I mean, that's really just something you got to ask yourself, and you got to see if you're really willing to do that, and it's something you can do. And if it's not, then maybe the stock market isn't for you. But if you can, then let's make a lot of money. So yeah, I mean, I'm definitely going to scoop up a lot of Meta shares. AMD is still looking really good. It bounced up actually a little bit here towards end of the market, up almost 2% on that. But yeah, I'm definitely going to scoop up a lot of Meta shares with my next purchases. And yeah, I mean, Amazon still looks good. Might even just move that to Meta, though. I think that's a company that I really like where it is. And I'm also going to buy some more Cheesecake Factory. That one's looking very cheap. All these stocks are very cheap. SoFi as well. Celsius, Nike, Shopify was under $100. This is a company that should not be under $100. I have average cost of $58, but I do want to average up on this one and buy some more. I mean, you can see year to date, this one's down 5.4%, but past 3 months down 10%. But all time, I mean, this is another company. Every dip, they've done their thing and gone back up. I mean, they had that COVID crash, they haven't fully recovered, but do I think Shopify's highest valuation ever is going to be $152? No, I don't think so. So yeah, I mean, with all that being said, guys, I think Meta is an easy purchase at this price and in this market. And if the stock market does go low, I feel confident that Meta is going to rise above where it is right now, and I'd just buy even more shares. So yeah, I mean, that's why I'd feel comfortable buying these great, Mag 7 as they're called companies, because even if you do buy them before, like if I put all my portfolio into Meta right now and I have no cash and the stock market crashes, I'd feel fine. I'd feel fine that Meta is going to come back above that price. If I put all my money into Fubo and the stock market crashes, I wouldn't feel the same way. But yeah, with all that being said, that's all I have for this video. So it's kind of just a little, talking about what's going on in the market right now and where I think there's opportunities to be made and plays to be done and money to be made. So yeah, I appreciate you guys for watching. I'll catch you in the next one. Be sure to like the video. I would really appreciate it. And let's get to 30 subscribers. Catch you in the next one. Peace.